we will be doing both FAC2601 and FAC2602 at the same time. So many of the time we will take maybe half of the time to do 2601, because the way 2602 is that you need to understand 2601 for you to be able to be very good, or to pass 2602. Your foundational knowledge in 2601 will help you to be able to understand better 2602. So I'll urge everyone who is doing 2602 also to attend, because, for example, if you don't know how to treat inventory or property, plants and equipment, how will you be able to prepare consolidated financial statement that want you to account for property, plants and equipment or an inventory? So you see, so FAC 2601 gives you the building block, and then FAC 2602 assume that you know the building block. You must now apply. So it will be worth your while to stay for both, and you'll gain a lot. You'll really be able to develop a deeper understanding of it. But for today's lesson, is good. I'm not going to separate into 2601 and 2602. It's just going to be because it is the introduction to accounting overall. All right, good, cool. Okay, all right. So yeah, why are we studying accounting? Who knows? What is accounting? If we talk about accounting, what do you understand about accounting?
Okay, so we do accounting because we want to account for each and every transaction that happens, and we need to know what has been purchased and for how much, for record keeping as well, for future reference.
Good, excellent. And why do we need to keep these records? Why are we recording at these things? Is it only for a future reference, like you said?
No, also to see how much and where we are overspending, and to find ways to minimize overspending, and to see if we are operating at a profit or a loss.
Good, excellent. I couldn't have said it more. Excellent. So the main objective of accounting is that we should be able to record, whatever is going on, whatever transaction that is going on in our business. And when we record these transactions, we'll be able to help us to prepare financial statements. And this financial statement gives us a lot of information, which will be able to help us to be able to do to be able to build our business properly. So we record the transaction, every transaction that has happened in our business or in our enterprise, with the sole aim of preparing financial statements. Why do we need to prepare financial statements? Because this financial statement give us a lot of information that is going to help us to be able to be better entrepreneurs, be able to manage our business properly. We'll be able to know what to do. Without financial statements, you wouldn't be able to know, which area of my business is doing well. Am I making profits? Am I making losses? If you look at my balance sheet, what is my balance sheet telling me? What can I deduce from if my balance sheet is like this? If I've got more liabilities than assets, what does it mean? If I've got more assets than liabilities, what does that mean for a business owner? If I make profit, what does that mean? If I make losses, what is that telling me? If my cash flow statement is in a negative, what is that telling me? So we record these transactions, and these transactions end up in what? In financial statements. And this financial statement tells us a lot of information about your business. So that is the main reason why we study accounting, and that's what accounting is all about. The main reason of studying accounting is that for us to be able to produce financial statements, which will be able to to give to the users, for them to make decisions. Users to make decisions, right? Some of the users of the financial statement are the banks. If you want to go and borrow money from a bank, the first thing the bank will ask you is that, show me your financial statements. From the financial statement, the bank will be able to tell you a lot whether they want to give you the loan or they don't want to give you the loan. One of the users of the information are the creditors, people that we buy from. Some other users are what? Investors, people who want to invest in your company. So all these people are different types of users, and they all need the information, your financial statement, for them to be able to decide what they want to do in your company. So that is why we study accounting. So it's very, very important. They said accounting is the language of business. Without accounting, you cannot be able to operate a business. Very, very important. Okay, good. So like I said, accounting is a process of recording, summarizing, analyzing, and reporting financial transactions of a business. So the way the process works is that you start off by what? By recording the transactions. After you have recorded every transaction that has happened in your business, you summarize it. So the recording is called, you put in what is called a journal. When you summarize it, you put in what is called a ledger. And then from the ledger, it goes to what? Your trial balance. Then from the trial balance, you prepare your financial statements, which are your balance sheet and your income statement and the statement of changes in equity and the cash flow statements. So this is the process. So the first is what? You record every transaction. In a what? In the form of what? A journal. Then you summarize it. All the transactions that you have recorded for the whole month or for the whole year, you summarize them in what is called a ledger. Then you put it in what is called a trial balance. Then you are now able to report your financial to prepare your financial statements. Does everyone understand? So that this is the process of accounting. This is how we get to the financial statements. I know many of you are studying and you have probably not had the experience or you haven't worked before, but in the workplace, this is what happens. So you've got a cash book clerk, you've got a cash book, a cash accountant, you've got a debtors accountant, you've got a creditors accountant, you've got this. So all these different accountants, all they do is that they process journal entries pertaining to their areas. Then the system will summarize it. And then we now are able to prepare our financial statements. Good. Cool.
I got it.
Yes.
There's a hand from Itumeleni Mukoni.
Okay.
Itumeleni, over to you.
Yeah, Itumeleni, over to you.
Oh, my apologies. I think it was a mistake.
Oh, okay.
Sorry, my apologies.
All right, cool. No, that's fine. All right. Benefits of studying accounting. What are some of the benefits of studying accounting? What do you think are some of the benefits of studying accounting?
I think it's like improved personal financial management. Good.
It improves your personal financial money. If you study accounting, it gives you the skills to be able to improve your personal financial. Why? Because you will be able to understand transactions better. You'll be able to know budgeting better. You'll be able to know how to budget better. You'll be able to analyze when money comes to you. You'll be able to know what to do with it. So that skill is very important. What other reason? What other reason do you need to be able to? What are some of the benefits of studying accounting?
I think also the fact that when you have studied accounting, you have a better understanding of the economy around you. You are able to understand what is happening when a share price is dropping. You are able to understand what's happening when companies are merging and all of that. So it actually enhances your understanding of economics around you.
Excellent. It enhances your understanding of the economic reality around you, because these days preparing financial statements is not even as important as the commentary that you as an accountant must be able to give to the board of directors. Okay, my revenue has gone up, my revenue has gone down. Why? You know, you need to be able to think broadly and say the reason why my revenue has gone up or it has gone down is because of what the economic situation. So it all brings back what to the economy, what is happening around the environment in which your business is. You'll be able to understand things like measures and acquisitions. You understand share prices. You understand economic factors, how economic factors affect your business, the share prices. Whenever they read the news, they talk about headline earnings per share. What is headline earnings per share? Basic earnings per share, dividends per share. What are these things? They talk about assets. They talk about measures and acquisition. They talk about investments. I mean, all these things you will do them in accounting, and as an accountant, you will have a better understanding. Because why? Because you actually work them out. You calculate them. And before you calculate something, you need to be able to understand it before you can actually calculate it. So someone who is studying economics, for example, they will just mention it to them and then they will just understand it. But they won't have a deeper understanding like someone who studied accounting, because you work with it on a daily basis. You produce these financial, you interpret these financial, you calculate them, so you're able to analyze them better. Good. What other? Let's take the last benefit. What other benefits you think you get from studying accounting? There are a number, but we'll just look at 3 and then we'll go through the rest. What other benefit do you think comes with the accounting knowledge?
Can I go?
Yes, please go.
It also assists with the stakeholder reporting, because we are then able to report to the investors on the return of their investment. And also it assists companies to be compliant in terms of statutory reporting.
Of course.
Thank you.
Of course. The only reason, the only way the tax man will be able to know how much income tax it must tax, for example, Standard Bank, is when it looks at Standard Bank's financial statements. So without the financial or without accountants getting the financial statements, it means that even the tax man cannot work. Investors, investors have invested in your company. They want to be able to know whether, they want to be able to know how the business is going. So we need to be able to report to them as well. Good. Everything you have said is just right on point. So let's look at some of them. Leadership and strategic thinking. It helps you to be able to think strategically. When you know accounting, it helps you to be able to think strategically, because the information that accounting gives you as an entrepreneur, you'll be able to know which areas I must venture and which areas I must not venture. So there are two kinds of accounting information. There is financial accounting, which the financial accounting is the one that the auditors will come and they audit, and then we publish it. Everybody knows about it, right? And then we have what is called the management accounting. So management accounting are the stuff that is actually happening in the company that we don't want people to know about, because if our competitors get hold of this information, they might take us out of business. So this is classified, very, very confidential information that only gets circulates among the directors, the CFO, and then the board of directors. Because and with that, the company is able to make strategic decisions. Very responsibilities and skill development, career progression and advancement. If you really want to advance in your career, an accounting skill and accounting knowledge is very, very important. Wherever you go in corporate, if you understand accounting, you will go very, very, very far, because now everything understand accounting means that it helps you to be very analytical. And in corporate, they need people who can actually think and be able to analyze data. Financial management expertise. You get to know how to manage finances well. Job stability and market demand. I mean, there's still demand for accountants, because every company, whether I decide, whenever someone decides to open their own company or enterprise, they will need an accountant. So an accountant is needed all the time, everywhere, whether in the big corporate, in medium-sized firms, in smaller partnership or close corporations, they are needed everywhere. So it gives it makes them to be in high demand. Competitive compensation as well. These days, when it comes to accounting, they look at, when you're going to look for a job, oftentimes they look at how many years of experience you have as an accountant, and based on the number of experience you have, your salary goes up accordingly. So it gives you a competitive compensation as well. So these are some of the benefits that you get from studying accounting. Global opportunities as an accountant in South Africa, or those who want to go further and do the CA route. When you have a South African, when you have the CSA, you can go anywhere and work, whether it's in Europe, in America, in wherever that you want to go, because South African CAs are sought after all over the world. Entrepreneurial pursuit. It helps you to be a better entrepreneur, because accounting is the language of business. If you don't know accounting, you will struggle. If you decide to study engineering, for example, and you want to open a business, unless you have done an MBA or some form of a course to give you some understanding of business, you will not be able to run a business. Okay. Good. What skills do I need to be an excellent to be able to excel in accounting? What do you think are some of the skills I need to be able to excel in accounting as a person?
I think
yes.
numerical skills.
Numerical skills, good. Numerical skills, and I'm sure that everyone who is studying accounting has got some level of numerical literacy. They are good with numbers, they are analytical. So numerical skills is very, very important. What other qualities do you think someone must have in order to be good at it?
Comprehension skills. I think in accounting you also need to be able to understand transactions, how they have been written, so that you can then allocate and account for them. Excellent.
You need to be able to understand transactions. So you need to be able to read and be able to understand things. You need to be able to know. To be able to read and understand things, and even judgment as well, because there are areas in accounting that also requires judgment, assumptions, and so on. Reading, understanding, very, very important. What else?
Financial literacy.
Mm-hmm.
Critical thinking.
Sorry, come again?
I was saying critical thinking.
Critical thinking. Okay, okay. Able to think critically, analyze things. Yes, critical thinking, very important. Very important. Last one. Last one.
Maker.
Sorry?
Good decision maker.
Good decision maker. Yes, you need to be able to, because there will be a lot of transaction that you need to be able to decide which one is more important, which one is not important. Materiality, so you need to be able to make good decisions. Yeah. So one of the things I've highlighted here, attention to detail, very important. Accountants, you need to be precise when you are recording the data. Remember, we said you record, you summarize, and then you prepare your financial statement. So you should be able to have attention to detail. Good. So if you are going for an interview, for example, and they said, what are your strengths? And it's an accounting job. One of the things you must say is that you pay great attention to detail, because it is one of the qualities that you cannot do without. Analytical skills, I think we mentioned that. Mathematical proficiency, we mentioned that. Communication skills, I think we also said that. Good communication, able to ability to be able to convey the financial information to stakeholders. Because if you can just do mathematics, but you cannot talk or you cannot be able to write properly, the information will not make sense, right? So as an accountant, you should also be able to convey the information in a form that somebody will understand, you know. So good communication skill, problem solving ability to be able to solve addressing complex financial issues, software proficiency, because these days everything is automated. Even accounting is automated. But as an accountant, even though we have automated system, you still need to understand how the system works. It's very important. Adaptability. There is new international financial reporting standard that comes out, you know, from time to time. You should be able to be adaptable so that if for instance, you are using the standard for revenue, for example, and 3 months later, a new standard comes up to say, okay, let's scrap everything that you know about revenue. Now there's a new standard that is telling us how to recognize revenue. You should be flexible enough to be able to adapt, right? Time management. Accountants are always under pressure because you have deadlines to meet. You have deadlines to meet. So you should be someone who's got very good time management skills. Very good time management skills. Very, very important. Teamwork. Oftentimes, you are not working alone. You'll be working with a group of people. So you should be able to be someone who works well with people. Very, very important quality. Ethical judgment. You should have as an accountant, you should have integrity. You are recording transactions, and these transactions are supposed to tell us a story about your company. So if you lie, then it means that you are not reporting exactly what the company or how the company is performing, and which is a criminal offense. So you should be able to have ethical values. So these are some of the skills as an accountant you should have in order to be very successful in this. Good. We've already spoken about the purpose of financial statement. What purpose does financial statement serve? To make decisions, performance evaluation, strategic planning, and that. So these are some of the purpose of financial statement. We need financial statement to make decisions, right? And who needs to make decisions? Banks need to make the decisions because you are going to borrow money from them. Your suppliers, they need the financial statement. Why? They want to be able to see whether you'll be able to pay them when they give you their goods. What other people? The employees need a financial statement. They want to be able to know whether the company has got enough cash for them to be able to pay their salaries every month. The government need a financial statement because they want to be able to calculate your tax for you, to know how much tax the company should pay. Investors, potential investors want to know whether they will want to invest in your company or not. So when the financial statements are prepared, these users of the financial statement, they look for different things in the financial statement. What a bank will look for is not the same thing that the employee will look for. What the investor will look for in the financial statement is not the same thing that a debtor will look for. Because these are different users of financial statement, but there are different aspects of your company that they look for in order to make their decisions. And you will learn all these as we go along. Very, very interesting. Performance evaluation. I said the performance over a period of time. So with financial statement, you're able to assess how your company is going. Is my company growing? Is my company declining? Based on your financial statement, your income. Are you making profits? Are you making losses? Year on year, is your revenue increasing or is revenue is decreasing? Another purpose is strategic planning. You need to be able to plan strategically, forecasting, budgeting. You need to be able to budget. You need to be able to forecast. It gives your company a direction. So if, and it's these financial statements that is going to be able to help you to be able to plan properly. Tax compliance, like you said, yeah, I think we've mentioned that the tax man also need that. Good. Now, what do you understand by IFRS or IAS? You are going to be using this extensively. What do you understand by IFRS, IFRS, and then IAS?
They are the guidelines for how we're supposed to conduct ourselves in transacting and reporting.
Good, excellent. So these are the guidelines. So when you did accounting at high school, they just told you, okay, revenue is this much, cost of sale is this much, inventory is this much, stock is debtors is this much, creditors is this much. But when now you are in tertiary, so now and you are going to have a deeper understanding of accounting. So accounting, so what happens is that there are standards or there are books, you know, that tells us for every element on the balance sheet or on the income statement or in the statement of changes in equity, there are standards that tells us how the amount or how that element of the financial statement should be accounted for. So now I'm going to learn how do I actually account for revenue. There's a whole big book called the IFRS that tells me how to account for revenue. Debtors, there's a whole book that is going to tell me how do I account for debtors. It's not as easy as those the high school time when they just give you the debtors. No, now you're going to learn, and it's a whole lot. Your mind will open. You will understand a whole lot of things, and everything about debtors you understand. Then there's a whole book about cash. How do I account for cash? What is cash? What do I classify as cash and not cash in a whole? So there's a standard, or when I talk of standard, it's just an information or a framework that actually tells you how to account for every element on the financial statement, every element on the financial statement. Very, very important. So the old one was called the IAS, International Accounting Standards. And the new one that have been issued now is called IFRS, International Financial Reporting Standards. So there is the IAS and then there is the IFRS, right? So the IFRS is replacing the IAS, right? So we have an IAS 16, which tells us how do we account for property, plants, and equipment. IAS 2, which tells us how do we account for inventory. IAS 36, which tells us how do we account for impairments, you know, and so on and so forth. IFRS 15, how to account for revenue. IFRS 16, how do you account for leases? So every single item on your financial statement, there is a framework. And this framework are what is called what? The IFRS and the IAS. So we've already discussed the IFRS and the IAS. Then the course curriculum. What are we going to be studying? What are we going to be studying in this particular model? So we're going to learn for FAC for 2601, we're going to learn about preparation of financial statements, which is IAS 1. So IAS 1 is the framework that tells us how to prepare financial statement, the format, the skeleton. How should the financial statement be prepared? And it's also because of this framework. That is why I can compare the financial statement of a company in South Africa to a financial statement of a company in England, for example, because a body has come together and they've said that this is how financial statement should be presented. So if I leave South Africa and I go and work in New Zealand or another country, I should be able to see the same format, you know, because we are all using what? International Financial Reporting Standards. So it is across board. So it makes you easy for you to be able to work from anywhere in the world because the standard that you are using is international. It is used everywhere. Okay, so we will learn about inventory, which is IAS 2, events after the reporting period, IAS 10, property, plants and equipment, IAS 16, provisions, contingent liabilities and contingent assets, IAS 37, investment property, IAS 40, leases, IFRS 16 because it's a new one, then financial instrument, IFRS 9, then revenue, IFRS 15. So every one of these, we're going to go deep and to understand how they are, how do we account for them, how do we recognize them, you know? And by the time you finish with one, you will know everything about it. If we do inventory, you know everything about inventory. If we do property, plants and equipment, you will know everything about property, plants and equipment. Investment property. So in the coming weeks, what is going to happen is that we will take it one after another. We'll do PPE, then we'll come to inventory, and then we come to events after reporting period, then we come to provisions, investment property, lease, and so on and so forth. And the way UNISA have done the question is that they don't give you a comprehensive question for everything. So as the topics are covered, then they give you a question, right? So for instance, if we do property, plants and equipment, all the questions under that model will be things related to property, plants and equipment. Then when you are done with everything, then there is a big comprehensive question which will test you on everything. Test you on everything, right? Good. Any questions?
I just want to find out about IFRS. So does these guidelines change or been amendment in maybe like in a certain period or what? Or they still remain the same? Because I remember now, I think we're in IFRS 17. So surely like we're coming from IFRS 16, if I'm not mistaken. You can correct me if I'm not mistaken.
Okay, all right, cool. So the way you are seeing it, so the IFRSs are not, so it's not like if I issue this IFRS, if I issue an IFRS, then I'll call it IFRS 1. Then I issue the next one, I call it IFRS 2. The next one I call it IFRS 3. No, it doesn't work like that. How they get these numbers, I have no idea. But it doesn't follow. It's not a chronological thing that IFRS 1, then IFRS 2, IFRS 3. So if you see IFRS maybe 20, then you think that, oh, this probably is the latest IFRS. No, it doesn't work like that. It doesn't work like that. Actually, of all the IFRSs here, I think the latest one is IFRS 15, the one for revenue. So what happens is that so an IFRS will come, or an IAS will come, and then you know that the world changes. You know, things change. The world is changing. People are finding different means, or things are happening. You know, for example, now there is AI doing stuff. There is automation. There's a whole lot. So now the board who made this standard will sit and say, okay, now it looks like the new IFRS for revenue is not longer, just for example, it's no longer relevant because things have changed. Life has changed. The way people account for these things have changed. There are now other things that have been introduced. So it looks like the IFRS has now become outdated. Let's amend it. You know, then they will now write papers for people to comment, to say that we intend to change the IFRS. What comment do people have? Then people will bring comment, they will debate about it, and then they will sit again. It takes years. Sometimes it takes about 4 or 5 years before an IFRS is actually implemented, because they need to consider a whole lot of things. Also, they need to consider other countries, how are other countries doing it. They need to issue what is called an interpretation note. So when the IFRS has come out, they need to be a framework that actually is able to explain how do you actually apply it. you know, and a whole all these things needs to be done before a statement or a standard can or a new IFRS can come out. So, for example, for a long time when I was in university, we used to have IAS 18, which was the standard for revenue recognition, how to recognize revenue. Then just about 4 years later or 3 years later, they issue the new IFRS 15, you know. And the reason why they changed that was that now they say that now it should be able to account for more complex revenue, because remember, companies are evolving. Companies are doing a lot of things now. The way other companies are making revenue is different from maybe 10 years ago. So there could be a company that the old standard could not be applicable. So they have to have a new standard which now take into account this new sort of stuff. And then even in IFRS, we used to have IAS 17. I think IAS 17 was the old leases standard. Now they realized that no, the leases, the way people were treating leases, it was very subjective, because we were classifying leases into finance lease and operating lease. An accountant can sit and say, okay, I'm going to make my lease an operating lease, or I'm going to make my lease a finance lease. So it was very subjective. So they sat together and said, no, now there's a new standard which says that if your lease meets the definition of a lease according to IFRS 16, then you must what? You must have the lease on the balance sheet. In the olden days, or about when I was studying, leases were not in the balance sheet unless it is a finance lease. But now almost every lease it must be on the balance sheet, with the exception of they gave 2 exceptions. But once we go into IFRS 16, you understand all these things. So this is how IFRS comes about. Okay, does that answer your question?
Yeah, I think
okay.
Well explained. Thanks.
Okay, thanks. Cool. Then FAC 2602, right? So what FAC 2602 is that what it does is that, okay, now you know leases, you know inventory, you know property, plants and equipment, you know investment property, you know all these standards. Now they tell you to prepare a consolidated financial statements, and that consolidated financial statement, they assume that you have the basic knowledge of all these items: inventory, PPE, impairment, leases, revenue, because if you don't understand them, it will be very difficult for you to be able to prepare consolidated financial statement. And you will see once we get into 2602, very, very, very important. So on 2602, we're going to be learning about what? Because these days companies don't exist on their own. For example, Standard Bank owns Liberty. Liberty also owns other companies. Those other companies also own other companies. You know, and then now they form one entity, right? So because they form one entity, the standard says that you must prepare what? Consolidated financial statement. A financial statement that brings all the entities that you control together. So you add all their assets together, you add all their revenue and income and everything together. And that is what is called what? A consolidated financial statement. You bring all your subsidiaries together and you prepare one massive financial statement. So we're going to talk about subsidiary. We'll talk about what is a subsidiary, on what percentage interest that a company becomes a subsidiary. We talk about an associate, what percentage interest in a company, at what percentage does if RMB decide to acquire investor, for example, at what level of involvement or ownership will it be an associate or a subsidiary? Then we'll talk about a joint venture. How do we account for a joint venture? How do we account for an associate? How do we account for a subsidiary? So that is what UNISA wants you to master in this particular model. Any questions? Any questions so far?
Hi, Gordon.
Yes.
In terms of, I know we're not there yet, but in
Yeah.
my head, I sometimes always have this struggle of differentiating between joint ventures and holdings.
Okay.
Does it have a thin line in between, or it's completely different?
Okay, so you're asking that you always get confused between what? A joint venture and a what?
Holdings.
Holdings.
Yeah.
So if
Like
you say
the headquarters.
Oh, okay. So a joint venture, are you talking about a parent company?
Yes.
Oh, okay. No, yeah, okay. So a joint venture, just like a subsidiary, is an arrangement between the parent company and a company that it controls. So the standard says that, for example, or for the purpose of this particular model, that if I am Standard Bank, right, as a parent, and I've gone to acquire Investec, and I've acquired 51% of Investec or of Liberty. Because I've acquired 51%, I control it. So any without taking all things being equal, right? The other situation that I can have more holding, but then I still don't control. But for all other things being equal, if I own 51% of a company, that company becomes my subsidiary, right? That is what it says under normal terms. Then it says that so a subsidiary is an arrangement between a parent company and a company that's acquired, but it owns more than 50%. So it's a subsidiary. Now, if I own more than I think 20% and 49, if I hold between 20% and 49%, that company becomes what? My associate. So subsidiary is if I own 50 and above, you become my subsidiary. If I have a company and I own between 20% and 49%, you are my associate. Then a joint venture. So a joint venture can be any percentage holding. So a joint venture is just an agreement between between two companies to say, okay, let's have a joint arrangement where we share profit 50-50. Or maybe there are three of us. Let's share profits 33 and a third, 33 and a third, or one third. So the joint venture is also an arrangement. It can be any percentage. It can be 50-50. It can be 75-25. It can be 80-20. It can be whatever. It will depend on what the agreement or what the question will tell you. That is a joint venture. So for a joint venture, you do not control, right? But it is just an arrangement between two or more companies who have decided to share profits in a certain way. To say that, okay, guys, let's work together. At the end of the year, let's share the profits in maybe 20-50 ratio, or let's share it 50-50 ratio, or let's share it 25-75 ratio, depending on what the joint venture arrangement says.
I would like to find out, is it doable, is it advisable for one to register both the modules, the 2601 and the 2602? Are they doable together in one semester?
As far as I know, one was a prerequisite for the other, or is that, or maybe Avase can help. I thought you need to pass 2601 before you can do 2602.
Correct.
My registration went through for the two.
Seriously?
It's prerequisite now. You can register both.
Oh, is it?
Yes.
Oh, okay. Oh, wow. I didn't know. Okay. I didn't know. That's good. You will kill two birds with one stone.
Is it doable? I'm a little bit nervous given the fact that
it is doable. It is doable.
Oh.
It is doable. We just need to work a bit harder. But it is doable. Yes.
With work in between, I'm gonna see a nightmare, but I'm very determined that I will pass.
It becomes difficult, but it is doable. It is doable.
Okay.
If
All
you
right.
haven't attempted it before, then it just need an extra work. But if you have attempted it before, then it's very easy. But it is doable. Yes, it is
Okay,
doable.
thank you so much. Okay,
Good.
thank you.
Cool. All right. Yes, there's another question.
I just want to confirm something because I just joined the meeting now.
Okay.
My apology for that. I didn't know that we had the class today. So I just want to find out with the assessment, because I saw the due dates. They open same day and they close same day. And also the time is like 1 hour, 30 minutes. So I just want to find out if there will be a paper before we can attempt upload the assessment on the system, or it will open on the same day, same time, or because I'm a bit confused.
Okay.
You will have to discuss. Gordon, let me respond to this.
Okay.
Later, you will have to discuss that with your lecturer for the module.
Oh, okay.
I just want to go back to the associate. You mentioned that anything between 20 and 49%. So what happens in a case of below 20%? So does it also fall under associate, or how do we classify that? Thank you.
Yeah, thank you for that question. So below 20%, it becomes what? A normal investment. Just like maybe I go and I buy shares in a company. If I buy shares in a company, and the shares that I've bought is maybe 19% of the company, it's still an investment, a normal investment. You treat it as a normal investment. You don't control the company. You're not a subsidiary. It's not your subsidiary. It's not an associate of you, because you don't earn enough. So you don't hold enough shares for you to be able to for it to be your associate, right? So in that case, it's a normal investment. Normal investment. And what I mean by normal investment is that it's like you going to buy shares in Sasol. Maybe your share is worth 0.0000001% of Sasol shares. The way you account for that shares is the same way that you account if you go and buy shares and you own 20% and below. Does that make sense?
Yeah, thank you. It's clear. Thank you.
Yeah, good. Yeah, so it's a very good question. So if it's below 20%, the company is not your subsidiary, it's not your associate. It's just you have invested in that company, and you must treat it as a normal investment. Cool. But if it's a subsidiary, there is a way, there's a standard that tells you how you must account for it. So if it's a subsidiary, you must what? You must consolidate it. If it's an associate, then we call it equity accounting. So you must equity account it. And if it's a joint venture, you have the option to do equity accounting, or there's a joint venture accounting for a joint venture. But we will learn all that. But I like the fact that you are bringing these questions in, because it means that you are thinking very deep, which is nice. Good. Cool.
Thank you, Gordon and Avase. I just wanted to respond to the lady who had previously asked about assignment dates. I'm not sure if she received communication or not, but if she can just go back and check on my UNISA. The first test is on the 21st, and the first one is on the 20th, and then FAC2601 it's on the 21st. So normally it's not on the same day. They follow each other.
Thank you so much for that clarification. Good. Now, this is a very important part. How does one go about studying for accounting and preparing for your assignment and your exams? What are the techniques? You need to understand the principles. Everything in accounting is understandable. You need to understand. And that is why you must ask as many questions as possible. And I also encourage people to actually to pre-read before coming to these sessions. Because when you pre-read, when you come, you are now able to ask relevant questions, right? Because maybe you saw, or when you were pre-reading, you read something you didn't understand. This is the time for you to say, oh, You know what, Gordon? I read this thing in the tutorial letter. I didn't understand. Can you explain to me? You know. So when you do you pre-read or you prepare yourself before coming to lectures, it helps a lot. Good. So you must understand the principle. It's not one of those courses, like I said. It's not like biology or history that you just it's just there. No, there's principles, and you must understand the principle. Very, very important. And because it's principle based, it means that I mean, I remember when I was studying, I don't remember an exam that was exactly the same as, you know, what I wrote. Because it's principle based, there's always a different exam. but because you understand the principles, and that is the beauty of it. Because I understand the principle, no matter what you ask me, I'll be able to get the answer because I understand the principles. I just don't know it. You know, sometimes when we in high school, you study for an exam and then you go and they don't give you exactly the same thing, and then you flank or you fail. But in accounting, you need to understand the principle and apply the principles. So it's going to be a lot of application. Okay, good. You must practice the problems. You must practice them. The more you practice them, and those who have done accounting before, they will tell you that, oh, I didn't finish the exams. Oh, I didn't finish. I just got maybe 60% through the exam, and then they said stop work. And you'll be able to go around that by what? By practicing. You practice under exam condition. The more you practice, the more you gain the speed of doing things. You must stay organized. You must start with the basics. When you are learning accounting, because the principle based, start with the basics. In your tutorial letter, it is also it does that. It starts with the very basic questions. Then as you progress, then more advanced and more difficult question. So when you are doing the basics, take your time, analyze the question, do it. Don't do it under exam condition. Do it and mark yourself and say, oh, then you analyze it. Where did I get it wrong? You know, which area am I not getting it? Then why you got it wrong? Then you study. Then you know. Then the next time you don't repeat it. That is how it works. You study the financial statement. We will do a lot. We will practice a lot. We practice regularly. Seek clarification when needed. So when you do something you don't understand, seek clarification. Ask me the question. You know, send go to your lecturers. Send them emails and so on, and just find clarification. Make use of resources, your textbooks, your tutorial letters, doing assignment, practicing exam questions. All these are what is going to help you. And I must say, the questions in your tutorial letters are more than enough. There's a lot of questions, so many questions. I don't think you even be done doing them. You can't exhaust them. There are so many of them. And then if you can join a study group, it will also help. I mean, if it's possible, can join a study group, it will also help. Any questions on how to study accounting and pass? And of course, attending these lectures, because these lectures, I'm going to show you easy way of getting these consolidations, very easy, and also very good examination technique. That will make you to be able to pass, and even if you don't finish the exam, at least you'll be able to get 85%, 90% of the work done. Because oftentimes accounting accounting papers are set in such a way that you don't finish, but you should be able to have a very good examination technique that will help you to at least to cover about 80 or 90% of the work of the exam. Okay.
I'm battling with calculations with goodwill.
Okay.
Kind of difficult.
Okay. All right. It's not difficult at all. It's not. There's nothing in consolidation that is difficult. You know, actually, there's nothing in accounting that is hard. All you need to know is to understand. Come to lectures. Come to these facilitating sessions and understand the principles. We will go through the questions, and once you understand the principle, I promise you, it's very, very easy. It's very, very easy. So today's introduction, but from tomorrow we hitting with principles and with questions. So it's very important that you actually attend. We'll go through the goodwill, acquiring a subsidiary in a premium, acquiring a subsidiary at a discount, acquiring it at acquisition, acquiring it at after acquisition, and all these things. What does eliminating journal entries? What does that mean? What is the easiest way for me to be able to prepare pro forma journal entries without even preparing the analysis? So all these things, I'm going to help you with that. But sometimes the analysis wastes time, and if you do analysis and you are not able to take it to the financial statement, you don't get any mark. Okay, cool. Any Donald? Yes, your question.
As you just mentioned, principles, I just want to ask a question on the markings of exams. I've been talking to some other accountants. They say when they mark, sometimes they only look at the principle. They don't care if your answer is correct. And somebody also mentioned that at most you will get 4 to 5 long questions, and they can decide to only mark 2 questions. So I just want you to clarify that if it's true or false, and
Okay.
why. Thank you.
All right, cool. So I've been marking accounting myself, accounting exams. So the way it works is that we give. So if you do the question and you get it right, we mark. If you get it correct, we mark it for you. So like, let's say you are doing some calculation and then the answer is 4, and you write 4. You get a mark because you got it right. But if you, let's say you wrote 3, right, and you showed your working how you got a 3, we will now, as an examiner or as a marker, I'm supposed to go and check your workings to see if your workings make sense. Because sometimes, you know, under exam conditions and you are panicking and whatever, maybe you meant to write 4 and then you wrote 3. But if I can follow your logic, I can follow your workings, then I'll give you this. So if the mark is a total mark of 5, I can give you 4. Right? If I follow your working, oh, your working actually makes sense. Just that you just made a mistake here, a very small mistake here, and that is why you didn't get it. And that is why it's very important that everything that you do in accounting, when you are asked to prepare financial statement, you must show workings. Very, very important. Because if you get it wrong, then we will go and, I mean, the examiner is trying to give you, the marker is trying to give you marks. So they're trying to search for where they can give you the marks. But if you don't show workings in bracket, or if you don't do working somewhere and then reference it back to your answer, then we'll not be able to give you your mark. Another principle is that, for example, if we ask students to prepare an income statement or a statement of comprehensive income, right? That if there are maybe 1,000 students who are writing the exam, I bet you we will get 1,000 different answers for that net profit figure. You understand? Because everybody is doing their own thing differently. So then it means that it doesn't make sense for you to actually to go and try and cast your income statement to make sure that it casts. We don't give marks if it casts. Because I'm telling you, your answer is going to be wrong anyway. So we don't give mark for the casting. But what do we do? Because everybody's gonna, if it's 1,000 people, we're gonna get 1,000 different answers for the net profit, right? So don't waste time casting. Write a number there. Thumbsuck a number. Maybe 400, 438. Don't make it all round. 438 something, right? And then move on. Because if you spend 5 minutes casting it, and meanwhile, because even if you get that net profit answer right, it's just 1 mark. But we look at all other things, how you got there, all the other. We will look at everything. We look at your revenue, your cost of sales, your gross profit, your right? And since you are under exam condition, you are probably panicking and the exam is hard, chances are you will not get the net profit figure right. So don't worry yourself trying to get it, because we will not give a mark for the casting. We never give mark for casting something correct. It's either you got it right and then we just give you 1 mark, or then we go and check all your other, from the top. You look at your revenue, your cost of sales, your gross profit, your other operating expenses, yada yada. So we mark all that, and you are showing workings, in bracket, how you put things together, how you add it, and so on and so on and so forth. That is how it works, right? Yeah. So I don't know if that helps to answer the question. So like I said, if you get the answer, if the answer is 4, you get a 4. We don't go and check your working because you got it. We will mark it for you. But if in case you didn't get it, then if you have shown workings, then we can actually go there and try and give you some marks. Okay. Donna, does that make sense? Did I leave something out?
No, you explain it very, very nice. Thank you so much.
Okay, thank you. Cool. Okay, so we're gonna, how does one step? Okay, so we will talk about introduction to company financial statement, the conceptual framework. Preparing financial statement, there are certain framework that helps us, guides us to be able to prepare it. Presentation of the annual financial statements. There we've talked about inventory, property, plants and equipment, investment property. We'll look at all these items. Then business combination, accounting for a subsidiary, accounting for an associate, accounting for a joint venture. We will look at all that. Prescribed textbook, I think that one you guys have the information. We've already spoken about the technique on how to study the theory of accounting, work through the illustration example, attempt the questions in the tutorial letters, do the questions and compare solutions to yours. Analyze the solution to your answers and find out why it differs from yours. Like I said, so initially you go slowly. You read the question, you try to work it out. Then you check, you compare your answer or your solution to the textbooks or to the tutorial letter. Then you try to find out why did you get it wrong, or and then you learn from it. And whatever you don't understand, you will go back and read more, or you will ask your lecturer, or when you attend this facilitation sessions, you can also ask me. Good. By repeatedly doing the questions and the examination condition, you improve. But of course, before you get to do questions and the exam conditions, you must have practiced and actually gotten the hang of it, so that you can actually say, okay, now I'm preparing for the exam. This question is 30 marks. Let me close my book and let me time myself 30 minutes, or if it's 30 marks, about 45 minutes. Okay, 45 minutes. I must also try and get as many marks as possible. Good. Cool. We will learn examination technique, how to read the required and what to highlight in the required. Very, very important. Many a times people fail because they don't even read the required. I don't know whether they are rushing to finish or what. They just, I'll show you what the most important things that you should highlight when you are reading the required. And then for every question there has to be a layout. If it's the statement of comprehensive income, the layout first. If it's the statement of financial position, the layout. Then from the layout, you read the question and you do them at the same time. You don't finish income statement, then you finish balance sheet. No, you do them at the same time. We will learn that. We'll learn about journal entries, because sometimes your exams will say, or your assignment will say, prepare the journal entries. Sometimes they will say, prepare the T account, or the ledger, prepare the trial balance. Then sometimes they will just say, prepare an extract of the statement of financial position or the balance sheet. We will learn how to do all that. How do you show? It's very important to show calculation, to show your workings. Very important, because without your workings, if you get something wrong, that means the marker will not even be able to fish for information for you. Your handwriting must be legible. Some people, their handwriting, you can't even see. And if you can't see, how do you even give the person a mark? You can't see the handwriting. So it's very important that you also work on your handwritings.
What I wanted to find out is on presentation of on doing assignments, do you allow us to bring prepared formats in the exam?
Pre-prepared format? No. So
like I prepare my format for financial position or statement of profit and loss
no.
before the exam.
It's not allowed. It's not allowed. It's not allowed.
It's not allowed.
It's not allowed. You cannot prepare. So then, where will you prepare it in your book or what? Because if it's open book exam, right? You have your standards with you. Open book exam. So if they say prepare the financial statement, you open to IS1. IS1 has got the skeleton or the framework there. So you just open it and then you copy it. You do get me? So all you need to know is that you must know that if it's inventory, I must go here to this standard. If it's I'm preparing financial statement, if I want to know the format, I must go to this standard. So you just must know which standard to go to. It is your exams are open book, right? It's not open. Okay, all right. It's not open. Okay, so if it's not open book, then unfortunately you are
not open book.
Okay, it's not open. Okay, then you are not. Then you must just know it by heart. You just must know it. You just must know it. Yeah, but it's not hard because as you do, the more questions you do, the easier it becomes. You'll be able to recognize all. And besides, for the purpose of this module, you are not expected to know every single line item on the balance sheet, just the one that we have gone through.
I wanted to ask for the written assessment. Do we draw down the tables or is it an app that we can use? Maybe, I don't know, Excel or something else that we can use on a computer to draw up the tables and everything to save up time.
I think for that you should communicate with the lecturer.
Oh,
yeah,
okay.
I think you should communicate with the lecturer because things must have changed, for this year. And I'll tell you something that maybe it happened last year, and then it might not be correct. It might not be relevant for this year. So you should just communicate with the lecturer. Okay. All right. And then you keep to the time limit, right? If you are writing an exam and so based on the mark, you know the time allocation. I think it's, you know the time. If it's 30 minutes, I think it's about 45 minutes or 50 minutes. So you write the time there. So once the time is over, you must stop. Even if you know it, you might just stop and move on to the next question. For you to pass an accounting question, you must attempt every single question. You can't say, I'm just going to do this question properly spend all the time and do it properly and get 100%, and then you will lose or marks, or you don't finish the other question. You will fail the paper. So once the time is up, you must leave. You must discipline yourself to leave and move on to the next question. But we will talk about all these things as we go along. Like I said, do not try to balance your financial statements. Don't try and balance them. It's a waste of time. They won't balance anyway because it's exams. So it's exams, so they won't balance. But the main reason is that so that you save time. You save time. Yeah, save time. Good. Any questions so far? Okay. So if there's no questions, let's just have a bit of let's get a bit deeper and say and also next week also or no, even tomorrow I'm gonna recap what I'm talking about. So now we've done with the introduction, right? So now we are now going to look at practical ways. Still the introduction, but we're still going a bit deeper. So the primary goal of a company. So who knows the primary goal of a company? And why is that so? Why is the primary goal of a company to maximize shareholders' wealth? So companies are set up, and the primary goal of a company is to maximize the shareholders' wealth. Remember, the shareholders are the owners of the company, right? So if I'm the owner, all that I want for my company is that my company's share price will grow, or my company will increase in profit. The more profit my company makes, the better the shareholders' wealth, isn't it? The more the owner's equity. So if this is a company that I have formed, the more income the company makes, the better it is for the shareholders, isn't it? And if I'm a shareholder, that's all I want. I want my company to grow. I want my company to make more profits. Because the more profits they make, the richer I become, isn't it? Good.
That's
so
correct.
Sorry.
No, I was saying that is correct, sir.
Yeah. Okay. So maximizing of the price of the existing ordinary share. So all these factors, maximizing the price of existing ordinary share, then the financial manager will act in the best interest of the company by making decisions that will maximize the price of the value of shares. So everything is talk about what? The value of the share. This is assuming that the company is a listed company. But if the company is not a listed company and it's a partnership or a private company, then all that I want is that my company must grow. It must have more income. That is all that I'm looking for. Okay, good. So that is it. So the question that they're asking here is that it says the primary goal of a firm is to maximize the shareholders' wealth. But why is it not saying that the primary goal of the firm is to maximize profit? So they're saying that the primary goal of a firm is to maximize the shareholders' wealth. But it is asking you that why is it not that is the primary goal is to maximize the profit?
I think because maximizing profit is not necessarily growth. So the company growing would be maximizing the shareholders' wealth. But maximizing profit is just that you have made more money this year than you made last year. It doesn't necessarily mean that you have grown as a company.
Okay. Okay, so to you, what does growth entail?
The value of your ownership in the business growing, that's growth.
Okay.
So your share was worth 20 rand at the last financial period.
Yeah.
And then this financial period, your share is now worth 40 rand. It doesn't mean that last year you made a profit of 2 million and this year you've made a profit of 4 million. I don't know if you understand what I'm saying.
I understand what you are saying. I understand what you are saying perfectly well. But I thought that the more profit you make, the more your share price increases.
I think also increase in assets and equity.
Increase in assets and equity. Okay. Increase in asset and equity. So what you are saying is that for my company to grow, I mustn't just look at my profit in the statement of comprehensive income or the income statement. I must also look at what? My assets, right?
Yes.
And all
your
these
balance sheet.
And my balance sheet. So all these are factors that they take into account for me to increase my share price. So my share price is not only dependent on my profit, it depends on other things as well. In fact, actually now, it even depends on things that actually don't even lead to cash. It leads to how they call it what? Sustainability thing that I do, you know, the more I give to the poor, the more sustainable that my carbon footprints and so on. All these now are now become factors. Yes, yeah. So all these have now become factors that investors or potential investors look at in order to value your shares. So it's not just about the profit. It's not even just about only your assets, but it's also about other things that you are doing. Are you helping the community? Are you polluting the environment, or you are not polluting the environment? So there are other factors that are so important, you know, that also will help you for your share price. So now as a company, you are not just, your sole aim is not just I'm going to make profit. No, but I'm going to make profit. I'm also going to make decisions that is going to what? To increase my assets. I'm going to make decisions that is going to make my company more sustainable. I'm going to make the decisions to benefit society. So all these things, and that is why now your annual report is so thick, because now it's not just about your financial statement. It's a whole report that you must tell us about what you are doing to the community. Are you polluting it, or you are actually helping society? All these are factors that must be taken into account. Good, excellent. I think we've spoken about that. Provides information that is useful in making good decisions. That's for accounting. To understand the use of that, we've talked about the nature of economic activity that accounting information describes. Assumptions and measurement techniques involved in developing accounting, the information that is useful. I think we've discussed all this. We've also, so this is like a recap. We've also spoken about the importance of accounting. Accounting is central to the modern business. Money makes the business go round, and accounting keeps track of the money, provides a framework of how cash and profit can be monitored and planned. It provides a means of effective and understandable business communication. Overall, accounting provides information to different users so that they can make economic decisions. I think we've mentioned all that. Types of accounting information. So like I said, so we have financial accounting, which anybody can see. These are lodged. If you go to the company, you can actually request. It's even on the internet. You can actually download a company's annual report or their financial statement. This is what the external auditors come and sign off. Then we have also what is called the management accounting. So the management accounting, this confidential information. This is information that if the competitors of the business get hold of it, they can ruin your company. So as an accountant, you are also supposed to be preparing the management information pack. This information is just for management, and it entails a whole lot of things. It entails the strategy. It entails the strategy, how they are going to be able to strategize, to be able to make more revenue. And so because of the sensitivity of this information, it doesn't go outside, right? It stays within the company because it's very confidential. Okay. So that is what. So we have two types of accounting: financial accounting and management accounting. Which one are you doing? The one you are doing right now is financial accounting. Financial accounting. Good. So these are some of the users of the financial statement. We spoke about people who need the financial statement. Yes.
There's a hand from ML.
All right, thank you.
ML, please. Yeah.
Yeah, good. On this type of information, so can a company present both, or management accounting, then those financials will then go to management and the other ones will go to the normal employee, or how does it work? Can you just maybe touch on that one? Because I'm actually trying to picture myself within the organization that I work for. So if they were to you request for financial statements, so will that fall under a normal financial accounting, or will that be a management accounting, or what? Can you just elaborate on those ones?
Okay, cool. So the financial accounting, right, is the accounting is the books, is your financial statement that is being audited, right? And why is it being audited? It is being audited because this is what the public see. And when the public see that, that is when they are able to make informed decisions about whether to buy into the company or not. So this is the financial accounting information. That is what affects your share price. Because that is what companies or that is what is available to the public. and so if anybody is to make decision about your company, the only information that they have is the financial accounting pack, which is your income statement, your balance sheet, your statement of change in equity, your cash flow statement. Now it's called, of course, your balance sheet is your statement of financial position. Your income statement is your statement of changes in statement of profit and loss and other comprehensive income, and your cash flow and that. So when a company says your financial statement, they're talking about financial accounting statements. This is it, right? Balance sheet, income statement, statement of change in equity, cash flow, and that. This is what is you can download from the internet, and this is also what you lodge with the registrar on a yearly basis. Some people can actually come and request for your financial statement from your company. That's what you give them. But then you have other information, and this information is for management use only, for top management. And like, to me, and as an accountant, you were on a monthly basis, you're actually supposed to prepare your management reporting pack. And this management reporting pack, the top management need this in order to make decision about where the company is going, right? And you see that they've got other things included in it. They've got your working capital, your working capital. They've got additional information. They may not even have a balance sheet. So if it's a company that they just wanna focus on their profit, they will say, okay, the management reporting pack, we just want the income statement. We just wanna look at our revenue and our cost. We don't care about the balance sheet, because the balance sheet is static. So every company is different, and every company decide on how they want their management pack to look like, right? So some companies, they've got their management pack that must include the strategy. What strategy are we doing for this project, for this product? Which strategy are we doing for it? And all this, that's why I was saying that these days as an accountant, the number crunching is not so much important, because it can be automated. But what is important for an accountant now is the comments that you give, right? That if my revenue has come down, top management want to know, why did the revenue come down? Give them an explanation. Was it because the interest rate was hyped? You know, interest rate increase, and therefore people don't have disposable income, or maybe there were economic downturn, or maybe there was this. So you must give information that now the top management are now going to sit and actually think. Remember, oftentimes some of the top management don't even have accounting knowledge. So you, the accountant, you must give them the numbers, and you must explain to them what is going on in their business. Then from then they will read it, and they'll be able to make informed decisions. So that pack does not go out. It stays within top management. So normally a management accountant will prepare that information in the company. Does that answer your question?
Yes, I'm clear. Thank you.
Yeah, good. Okay, Avasia, where do you normally save this? My notes.
We are under UNISA Gauteng Region YouTube. The notes, when we are going to create a new folder where they will be able to access all the notes for all the Gauteng Region modules which are offered for tutorials and Acalit workshop. For the recordings, you go to UNISA Gauteng YouTube and you subscribe. Every now and then when they say new YouTube, when you will get the message.
Yeah, so these are some of the users of the users of accounting information, or the users of the financial statement. Like I said earlier, each user concentrate on a different part of the financial statement, because each user is different and they look at different things, right? Good. So the external users, we have the owners or the investors or potential investors. They want to know whether the company will be able to pay them what? Dividends, right? Good. A creditor. What do you think the creditors would want to know?
They will want to know if you will be able to settle what you owe them.
Good. Be able to settle well. So because of that, which part of the financial statement will be very important to them?
Assets.
Assets.
The cash flow. The cash flow.
The cash flow. Yeah. I think the cash flow, because if you say assets, the company now has to sell assets before they can liquidate the asset, before they can pay. They don't want that. They want to see whether you have ready cash to pay me, right? So to a creditor, they don't care too much about the balance sheet. They look at the cash flow. They look at the cash flow, and that is why it's very important that an accountant also prepares what? The cash flow statement. Good. A potential investor, where do you think they will which aspect of the financial statement will be most interested to them? I'm a potential investor. I want to invest in the company. Which part?
I think firstly would be the dividends, the earnings.
Good.
But besides that, they also do want to look at the whole financial report as a whole to see the health status of the business.
Excellent. Excellent. And like we said earlier, that these days it's not just about a profit that will maximize the share price, right? They look at holistically what the company is doing, what sort of value is adding to society, how it's helping the society, helping the poor, potential, the sort of industry that they are in. So there's a whole lot of, at the annual rate. So it's not just the financials, but other commentary that tells them that this company is going to be, in operation for the foreseeable future. Very, very important. Labor unions. Where do you think they'll be most interested in the financial statement? Where do you think COSATU will be which part? When they look at your financial statement, where would they go first?
Yeah, I think basically human resource and safety.
What safety? Good. But which aspect of human resource are you thinking about?
Can I try?
Sir. Yeah, no. Let try, but let Donald finish his question. Yeah, Donald. Which
human resource? I'm talking about manpower. They people who are doing the job for the company.
Okay.
Yeah, that's why they're concerned with. I think that's where I don't know else. But I think that's why they.
But what? Yeah. Okay. What information would knowing if I know about the manpower, what information is that conveying?
Okay.
Just knowing manpower. So
okay. Information will be: is the company looking well after their employees? For instance, I can make an example of. Incentive, on their salaries, things like that. Yes. If they're paying them well, yes. I think that's the main thing as well. Yeah.
Good. They'll look at that. Yes. Sorry, someone wanted to say something. Please, you can add.
Okay, I wanted to say for labor unions, they will look at the cost of employees. Okay. Also, how the company will benefit their employees, like paying off their medical aid, whether they also paying their the return on tax on behalf of the employees, or the employees should do it themselves. Yeah, things like that, as the benefit of employees for working for that company.
Good, excellent. Good. And then the government agencies. Let's say government agencies like SARS, what would they look at?
I think they will look under income to check and verify against maybe the payments, the income tax.
Yes, they'll look at the income, because it's based on the profit before tax. That is what they tax, right? So they need that information so they can calculate properly what tax the company must pay. Suppliers So I think suppliers, I think we've already, they are the same as creditors. Customers, which part of the financial statement do you think will interest them the most?
I think they will look at what will interest them is the cost of sales, because I believe that the cost of sales is what determines what the company is offering to the price of what the company is offering to its customers.
Okay, good stuff. Good stuff. Excellent.
How about also
yes?
the inventory, you know?
Okay.
How whether the company that they want to do business with will be able to produce enough inventory for them.
Good. They'll look at that. And you know that even though on the face of the balance sheet you just have inventory and you have the amount, let's say inventory, then you have 2 million, but there is a note to the inventory amount, right? If you look at the note to the financial statement, so that's where they give you more detail about what the inventory consists of, how much is in the warehouse, how much they are selling every time, and so on and so forth. Yeah, so they'll look at that aspect. Good. And then the general public, what would they be interested in? The general public.
I think the profit of the business. If the business does well, the public will be intended to buy the shares of the business.
Okay, but that one will be more for the investors. Investors will decide whether, okay, if you have more profit, then maybe let me buy into the company. If not, but what do you think the general public will be more interested in?
Can I try to
Okay. Yeah.
They will be interested in the environmental. I forgot the phrase, but
environmental
to do with
sustainability.
Yes, environmental sustainability, to see how the business is actually affecting the community at large.
Yes.
Also, corporate social responsibility. They'll also be looking at that to see whether the business is actually responsible socially.
Yes. Excellent. So you see how important the financial statements are. And it's very important. So every person or every categories all need to make decisions, which are very, very important. Then we have the internal users. So these people, most of the time, these guys will have the management information. The one on the right, the one that says internal users. These people will need the management pack or the management accountant. So the board of directors, they need a management accounting pack. Why? Because the management accounting pack has got more detail that the public do not have access to. It talks about, their markup, their strategy, which areas are they going to conquer? Are they going Europe? Are they going Africa? So they've got all that. Chief executive officer, they want to know what margins the company is actually making. How many items have they sold? How many items have they written off? And so on. And so things that they don't want the public to know, these items will be in the management accounting pack. The vice president, the business unit manager, the plant manager want to know that when we conducted the stock count, is the assets or the stock on the floor the same as what is in the books? If there's a discrepancy between what is on the floor and what is written in the ledger, then maybe they will say maybe there has been a theft, somebody is stealing or something, So all these things is providing information for people to be able to make decisions. That is why accountants are very important in a company, because without this information, the company wouldn't know, where do I strategize, which customers do I target, and based on the management information has got more things, got more detail. It's got profitability by sector, right? So if you are working in a manufacturing company like maybe a Coca-Cola or something, it's got the profit by sector or maybe by country or by regional. So based on that, they say, okay, KwaZulu-Natal, we are making losses. In Gauteng, we are making profit. Maybe we should sell more to Gauteng than to KwaZulu-Natal. So based on the management information, they're actually able to make strategic decisions, based on the information that the management accountant or the accountants are giving them, which the public doesn't have access to. They're able to make the decision. And that is why one of the skills or characteristics of an accountant is that you should have time management, because when the financial period closes at the end of the month, management need this pack as quickly as possible so that they will know their next turn of events, what they want to do next. Because remember, we are in a very competitive environment. So if you are able to have information quickly, you'll be able to outwit your competitors. And so that's why you should be able to present this management account information to them as quickly as possible. Store managers need that as possible. Line supervisors, they need the information as possible. Any questions?
Yes. So I was just wondering with regard to the external users. So will the accounting information presented in a form of financial statement have a deeper, I mean, we talked about the labor unions to say they will be looking at the RAM. One will assume that it will obviously then show the consolidated numbers where it wouldn't go deeper to say how, to what extent are we paying each employee, how much, and is it correct? Is it in line with this and that and that? So, or perhaps maybe will they request additional information just to interrogate that information, or by just looking at the the financial statement, they will be able to draw the conclusion that they want to draw. Thank you.
Okay, thank you. Thank you for that question. It's a very important question. So the Companies Act, right? The Companies Act has actually stipulated what must be in the financial statement that might be given to the external users. Corporate governance, right? If you're a listed company on the JSE, corporate governance, right? Remember, if you're a company that is listed, you are recommended to follow corporate governance. Corporate governance also reiterate the minimum information that must be given to users of the financial statement. So the information that we give to the users of financial statement externally, it is something that is it is by statute you should give them, and it should be more than enough for people to be able to make whatever decision that they want to make. So the information that is presented in the financial statement, according to the Companies Act, it should be more than enough for any reasonable person to be able to make informed decisions about the company. But what the company will not give you is their management information pack. That one, they are entitled to that confidentiality. And they will not request for any additional information. Remember, these days, it's not only when you look at an annual report, it's not only about the balance sheet, income statement, and statement of change in equity and cash flow. You've got other things as well. You've got the notes to the financial statement, which gives more additional or in-depth, right, about most of the line, about 90% of the line items in your financial statement. If you go to the notes, then after the notes, then you've got the director's commentary, you've got the CFO commentary, then you've got the sustainability report, then you've got other corporate governance report. So there is a lot. If I give you an annual report for SASO, you won't be able to read it. I promise you, it's too much information. So they have more than they have information on every sector that will be able to to make the users of give the users the standard users of the financial statement they give them more information for them to be able to make informed decisions.
Okay, thank you.
All right. Any other question?
Yeah, I just wanted to also add to what you are saying in response to the question that was just asked.
Thank you.
There is also integrated reporting.
Yeah.
And that report itself has quite a lot of extensive reports about, the employees, how they're being compensated, gender issues, so it's quite a detailed report about many other things.
Very detailed. Yeah.
So will that report be attached to the financial statements, or is it a separate report?
It is okay. It's not part of the financial statement, but it's part of the annual report.
Oh, okay. No, it's fine. I was just referring to the financial statements to say.
No.
Obviously, then,
not,
yeah. No. Clearly, I mean, there are other reports in addition to what you would have been presented if you want to go deeper. So I was just wondering to say, does the financial statement go to that depth where it also obviously then classifies certain things? But obviously, then if there are these other reports,
it gives you the income statement, balance sheet, statement of change in equity, cash flow statement, and notes. And then I think what auditors also audit is that they audit the director's report. These are the things that it has. Yeah.
But one can also assume that as the labor unions, there are maybe those small subcommittees that they will then sit into. If maybe they want this integrated report, then they can go deeper into that.
Yes, it does.
Thank you.
It does. Okay, good. So tomorrow is going to be very interesting. So tomorrow we're gonna go and we're gonna talk about a full set of financial. How do we get from a journal to a ledger, to a trial balance, to an income statement? We're going to have an example of transactions, and we're going to try and prepare the journal entry. Then from there we'll take it to the ledger, and then from there we'll take it to the trial balance and the financial statement, so that someone who is not getting it will be able to understand the whole process. And then we will look at then the following week we start looking at the IFRSs. We take one, we delve into it, we take another one, we go straight into it, and then so on and so forth. Then as we're doing it, we're tackling questions and also learning the exam techniques at the same time. Okay. All right. So I'm done. If anyone has a question, you can ask.
Can you see my screen?
Yeah. Oh yes.
That's where you will get when the recordings.
Okay.
YouTube, FAC. You can also put the dates when the time goes on. These are the previous YouTube for the first semester.
Okay.
You can also revisit them, just to see what happened during the first semester.
Okay. Thank you. Thanks, man.
Thank you so much. Thank you so much, guys.